My expectations for the first quarter of 2012, as with the start of any new year, you're going to have those tenants in the market that come out ready to make a decision and start out the year on a good foot. And so all this activity at the end of 2011, some of it's going to start to come to a close. I think with it being a tenant's market and with there still being a lot of vacancies in the market, you are still going to have some feet dragging, a lack of sense of urgency, and still shopping around. But in general, landlords are still going to be making concessions and going after deals aggressively and looking to get those good credit tenants in their building and get some leases signed.
Blackstone Group acquired $1 billion worth of office assets from Duke Realty. In Columbus, that in total 15 properties, mostly in the Tuttle area. Those trades, all aggregated in one massive $1 billion price, turned out to be on our books show up at $77 a square foot, a little below what most office buildings would trade for in this market. On a lease basis, the bigs are back. We track all the tenants in the market on a monthly basis at Colliers. Of those 80 to 90 tenants that are in the market today, over 36 of them are over 10,000 square feet. And that's a significant trend in this market, that they're big tenants looking for space. The leader for the last quarter was JP Chase, which acquired property in the Polaris market and also the Gahanna market, totaling 135,000 feet. That follows on their third quarter execution of leases for 145,000 feet in both those markets as well. That's a big absorption in a 6-month basis.
Coming into 2012, I forecast that it's still going to be a tenant's market. Tenants are still going to be able to command the concessions that they've been commanding for the past few years. Landlords are still going to need to offer the free rent. They're still going to need to do the tenant improvements, and are still potentially going to have to give some moving incentives for tenants to relocate to their building. Renewals are still going to be highly scrutinized by each tenant. They're going to consider all of their options. That being said, I still think renewing is going to remain the tenant's best option. As it relates to sales in the market for owner-occupants, I think that there's plenty of opportunities out there with the interest rates where they are to find a building that they can move into as is and pay a good amount compared to rent. So that's going to continue to be an option for a lot of users in the market.